GM. Today's lesson. Reminder about the importance of taking time at key areas. So recording this today, Bitcoin dipped below 60k, then got back above and held. And what's important to note now is not about what's happening with Bitcoin today, but how you should approach key inflection points in general as a trader and as an investor. What people tend to do is price comes to a level and then it bounces, right? Let's call it a daily level or a strong weekly level, like 60k is for Bitcoin. 60k is obviously a massive daily and weekly support. It's been tested now multiple times, probably 4 tests of it. This is now the 5th. The problem that arises whenever you're watching this is that when price comes to it, it tends to come to it and on a low time frame there's a reaction and you tend to then overreact. So for example, Bitcoin might go below 60k like it did today, and then you will panic because it's below. So it goes to 59,400 and you're like, oh no, that's not good. It's broken 60. But you're looking on a low time frame. Remember, if it's a daily or a weekly level, you have to wait for a daily or a weekly candle to close. Because we can go down below that level and close way above it, and then suddenly everything looks different. And the problem is, when those moves happen, you tend to react, if you're not careful, you tend to react emotionally, very, very irrationally, and make a bad decision, such as, I'm selling everything because it's below 60. Or, you do nothing, you let it see, you see it go below, and maybe you de-risked or you sold stuff before, or you're sidelined or you're bearish, but then you see it bouncing, and you're like, oh, it's bounced from 59,300 all the way up to 61. And then you're like, shit, I need to get back in because that was it. That was the test of 60 and it's going to go up now. 60k is held again. Again, for that, it's too soon. Key inflection points require time, multiple candle closes, retests, bounces, pullbacks, all of that. You always have time, but your brain will trick you into thinking you don't. So go and look at these levels, right? If you're looking at 60k, there is no point looking at 60k on a 1 hour chart. That's completely irrelevant, right? That only applies to people who are trading very low time frame moves. But if you're looking at 60k, the first time we touched 60k on a retest was on the 5th of March after we touched all-time high. So we touched all-time high, 5th of March. We had that really sharp 15% fast sell-off that went down below 60. 5th of March. It's almost the end of April. It's literally the last day of April. That is 2 months ago. It's 2 months since we first hit it. So anything that happens on a 1 hour chart, 1 hour candlesticks around 60k is irrelevant. You want to see the daily close. You want to then probably observe the next weekly close. And you want to see multiple candles of confirmation or rejection on either side based on those. Now, this is always easier said than done, but that's why I want to remind and reiterate. Because what people tend to do is they jump the gun. They're like, and even this doesn't always apply to taking bad trades. Even if you've been waiting patiently for the level, right? Something as simple as this. You said, if it touches 60 but holds, I will buy between 60 and 61, right? But then it comes down and it touches 60, it holds, but you don't have confirmation yet, right? You don't have a daily close or whatever your trigger is. And then it rallies to 62. Now, because it rallies to 62 on a low time frame, what do? You have to wait. You set your orders because your buy zone is 60 to 61. Your buy zone is not, oh, the first bounce went to 62, so I need to FOMO and get in. No, you have your plan. Remember your higher time frame charts. It's going to come back and retest. It just always does in these areas, right? It'd be a very, very, very rare occurrence if it didn't come back and retest wherever the low is, because it just does that. Go and look at any key level, especially round numbers. Go and look at 30, 40, 50, 60, 70. And look at how many moves there are off those levels. And how in the moment it's like, oh, we hit that level, it's never going to hit it again. And then a few days later, a few weeks later, it hits it again. This is much an exercise in just basic discipline than anything. So keep it in mind. It applies most to the big levels, obviously, but it applies on every time frame and every chart and every level you're waiting for. If you're waiting for price to retest the moving average, you have to wait for it to retest the moving average. You can't say, oh, that's close enough. You're either waiting for the retest or you're not. If you're waiting for price to hit an order block, it has to either hit the order block or not. And especially when you're waiting for retests, understand that if Bitcoin is going to test 60K twice, it can do it in this way, right? It can go to 60, then go to 66, and then go back to 60. And this is what gets people trapped. They FOMO in at the 66 because they had a plan to buy 60. And the one I'm looking at here, if you want to look on your chart, 13th of April. 13th of April, we dumped down to 60. Probably a bunch of people had a plan to buy 60 that time. And they didn't buy it. Why? Fear, right? And then it rallies up. Sharp rally. 2 days later, on Monday, it's up at 66. And it looks like it's never going to pull back. And they're like, fuck, I said I'd buy 60. And it's gone. What happens? It drifts all the way back down to 60. And then it tests it. And it bounces to 64. And then it goes all the way back down to 60. Again, 3 tests within a week. Right? So for people who want to just buy that level, patience gets rewarded. And even if it didn't, the fact that you're able to stick to your plan is the most important part. So, key inflection points, key pivot levels, these turning points in the market, where you know for sure we're bullish above 60, we're bearish below it. But when people say that, that doesn't mean a 1 hour candle close below 60 equals get short, or a 1 hour candle close back above 60 equals get long. You have to clearly lose the level, which means multiple daily closes, even a weekly close, and quite often some chop around the level, because it doesn't just break it that simply or easily. If everyone's eyes are on a level, it's going to provide more support or resistance. Keep that in mind. It will help you frame your ideas, frame your bias, and understand your time frames. Remember, if you're looking on a daily or a weekly level, don't get caught up in where the price is on a 5-minute chart, 15-minute chart, 1 hour chart, and so on.